Welcome back everyone. Here at Smart Finance, we're all about finding excess returns in the market and growing our wealth. Since time is money, I'll get right into it. Today I'm going to be talking about RIOT Blockchain. I'll begin by covering their business model, then go into how Bitcoin's upward trajectory gives the company massive upside. Lastly, I'll discuss their financials and analyst expectations surrounding the firm, as well as the downside risks to investing in a company like RIOT Blockchain. Make sure to drop an early like to help with the algorithm. Let's get right into it. RIOT Blockchain is mainly involved in digital currency mining, which utilizes specialized computers that generate digital currency, primarily being Bitcoin. So what is Bitcoin mining? Well, Bitcoin mining is performed by high-power computers that solve complex computational math problems, and these problems are so complex that they cannot be solved by hand and are complicated enough to tax even incredibly powerful computers. And the result of this is twofold. First, when computers solve these complex math problems on the Bitcoin network, they produce new Bitcoin. And second, by solving these math problems, Bitcoin miners make the Bitcoin payment network trustworthy and secure by verifying its transaction information. So the company's main business is running these computers to do Bitcoin mining, and in turn, they receive Bitcoin as a reward. As of the 31st of December 2019, the company had approximately 7,400 miners installed and operating. However, the company has been aiming to be one of the largest and lowest cost producers of Bitcoin in North America and has been massively investing into new miners. Just in the last month, the number of miners has increased to a total of 11,542 in operation, leading to a nearly 26% increase in production over its prior operational hash rate. And the hash rate is essentially how fast the company can mine these Bitcoins successfully. And the higher the hash rate the company has per second, the more money they'll make from mining Bitcoin, as they'll be able to mine more Bitcoin overall. And the company recently announced that they had achieved a rate of 1.06 exahash per second mining rate. And Jason Les, the CEO, is quoted saying, "Exceeding 1 exahash per second in hash rate capacity marks a major milestone for the company. While we are proud of this accomplishment, we view it as a successful completion of just one of our many steps on our ongoing growth plan." So the company continues to invest in Bitcoin mining and has hit a variety of growth milestones, seen on the images on the video. However, they're going all in on Bitcoin, so if it continues to rise, they'll reap these rewards, and in doing so, they continue to invest into more miners. The new CEO says he expects to triple the company's mining capacity by the fourth quarter of this year, with 26,000 more miners due to come in by the end of the year, which will come out to a total of almost 38,000 mining machines in operation by the end of the year, compared to only 11,000 currently. And with this, the company expects to have an aggregate Bitcoin mining hash rate of approximately 3.8 exahash per second, which is an astounding number. So that's one reason we've seen this stock's price go up so much recently. The company is investing majorly into Bitcoin mining and expects to triple their operations in just the next year. And that's what leads us to the second main component of this stock surge. As the company mines Bitcoin, it gets those Bitcoin at its fair value. So if Bitcoin's worth 40,000, they're getting a Bitcoin worth 40,000. So if Bitcoin's price goes up, each coin they mine is more and more valuable. So as the price of Bitcoin goes up, the company benefits from that. And mainstream adoption of Bitcoin is gathering pace. For instance, just over a week and a half ago, Tesla announced that they had invested 1.5 billion into Bitcoin, and now other companies are following suit as well, such as MasterCard announcing just on Thursday that they'll start supporting cryptocurrency transactions. And with more and more of this news coming out, the price has been steadily rising as more and more companies adopt it. And the thing holding cryptocurrency back currently is wide adoption from retail consumers and institutions as a whole, but we're starting to see this change happen, and hopefully into the future the price will continue to rise as more and more people adopt this currency. Just this week we've seen Bitcoin go above 50,000 per coin with all the positive news that's come out in the last week. I now want to look at some of the leading analyst perspectives on the company as a whole. So the company made a loss of 20 million in the full financial year. However, RIOT Blockchain is bordering on break-even, according to some analysts, such as American software analysts. They anticipate that the company will incur a loss in 2020 as it did, before then generating positive profits of $48 million in 2021. And this analyst firm expects this company to be profitable going forward past that, and obviously if the price of Bitcoin increases, their profitability will only increase more and more. I want to dive in deeper into some analysis from H.C. Wainwright analyst Kevin Deedy and Zacks Equity Research. So starting with H.C. Wainwright, their analyst Kevin Deedy expects the company to contribute approximately 2% of the world's overall network hash rate by the end of the year, meaning the company would be doing approximately 2% of the worldwide Bitcoin mining by that time. And with this, he raised his expectations of revenue from 53 million to 159 million, and he said that if it were to stay under the $40,000 neighborhood, however currently it's above $50,000 a share. He said previously that if it was around 40,000 for the whole year, RIOT sales would be approximately 230 million. However, as we see now, Bitcoin is already 10,000 higher than that price, so the revenue would be even higher. And if Bitcoin's price continues to rise, this revenue range would even increase further. Now moving over to Zacks Equity Research Estimates. Zacks Equity Research's consensus estimate for Riot's full-year earnings has increased almost 400% higher within only a quarter. This shows that analyst sentiment has improved and the company's earning outlook is much stronger. And based on these factors, Zacks upgraded RIOT Blockchain to a buy rating, and this rating is only given to the top 20% of stocks that Zacks covers. So based on these analyst recommendations, how can we as investors get in and capitalize on Bitcoin, or on RIOT Blockchain specifically? Well, there's one thing I want you to keep in mind. Personally, I think a Bitcoin crash will be coming. It may not be huge, but it will come eventually because it has historically throughout Bitcoin's life cycle been very volatile. In particular, in 2017, during the first big run-up of Bitcoin, it crashed more than 30% 5 separate times. And the difficulty with this is, even if a crash comes later, we may never see the levels Bitcoin is at today. So you could buy today, it could crash down to 30,000 and that would be a much better buying opportunity. But at the same time, it might go up to 70,000, crash down to 50,000 and never go below 50,000 again. My personal method is to dollar cost average over time since the market is very hard to time. Obviously, you'd be better off waiting for a crash and then putting all your money in at the crash, but the reality of it is you don't know when the crash is coming and it might never be at these levels again. Other than the possibility of a Bitcoin crash, I want to look at some other risks involved with the crypto asset. It's always had vocal critics, and on Wednesday, an economist, Nouriel Roubini, argued that Bitcoin's fundamental value is negative due to its environmental impact, and this is backed by a variety of studies, including from Harvard, which revealed $1 of cryptocurrency coin value could be responsible for up to 2/3 of a dollar in health and climate damages. And the reason for this is that Bitcoin has a carbon footprint comparable to that of New Zealand, producing 37 megatons of CO2 annually. And the reason for this obviously is because the mining computers take up so much energy to run because the hash rate is so difficult to achieve. A separate study out of Cambridge argued that this figure is even higher, being equal to the entire annual consumption of energy as of the Netherlands. And with most Bitcoin mining facilities currently being located in China, which is heavily reliant on coal power, there is a very large effect on the environment from Bitcoin mining. So that is something to keep in mind. However, this may be an advantage for Riot, who base most of their operations in mining out of the US, which uses cleaner energy to power their machines. Regardless, this is something to keep in mind, whether you yourself are an ESG investor and care about this, or more so as a form of regulatory risk in case there is some regulation on Bitcoin mining in the future to limit this environmental risk. If you take anything from this video, I want it to be the next 3 things. First, Bitcoin is continuing to be adopted by a variety of companies and regulators, with the price continuing to rise as it becomes more integrated into the markets as a whole. Secondly, Riot is investing massively into Bitcoin mining right now, expecting to triple its capacity by the end of the year, which will result in massive growth, especially if the price keeps going up. Lastly, it's important to consider the risks associated with this crypto asset, whether environmental or regulatory, and to know that this asset is highly volatile. Perhaps waiting for another crash is the best way to get in, or perhaps it'll be too late by then. This is the hardest nut to crack. My method personally is to dollar cost average over time, since the market is almost impossible to time. Based on these factors, I'm a holder of Bitcoin as well as other cryptocurrencies, but I remain aware of their risks and don't invest a large chunk of capital into them. My personal preference is to invest in the crypto asset itself rather than a mining company. However, I still think Riot is a great company to invest in. I just have a large enough exposure to the industry already. And if you're looking for more leveraged returns, Riot could be good because it has higher upside and downside than Bitcoin and is hence more volatile. The aim of this channel is to find stocks that have great potential and provide concise analysis for you all at home who don't have the time to go and do all the research and find these stocks yourself. So if you're not only interested in learning more about these companies, but also finding out about it before anyone else, keep your finger on the pulse by subscribing and turning on notifications. Remember, this video is for entertainment purposes and not personalized investment advice. You should consider your own unique financial position and do your own due diligence before making any investments. See you next time.